This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Saudi Arabia's Energy Minister Prince Abdulaziz bin Salman earlier this month outlined one of the biggest reforms at OPEC in recent years and presented it as a reward for countries that invest in their oil industry. The change clears the way for giving larger production quotas to OPEC Gulf members such as Saudi Arabia, the United Arab Emirates and Kuwait at the expense of African nations such as Nigeria and Angola. Production quotas and baselines, from which production cuts are calculated, have been a sensitive subject within OPEC for decades as most producers want a higher quota so they can earn more from oil exports.
Oil prices edged higher on Wednesday after industry data showed a larger-than-expected drawdown of U.S. inventories, signaling robust demand from the world's biggest oil consumer, but the gains were limited by worries over interest rate hikes. Brent crude futures rose 51 cents, or 0.71%, to $72.77 a barrel at 0346 GMT, while U.S. West Texas Intermediate, WTI, futures gained 50 cents, or 0.74%, to $68.20 a barrel. Both contracts had fallen by about 2.5% in the previous session on signals that central banks may not be done with interest rate hikes.
Moving on to the top news in the energy sector.
Asian buyers have rushed to lock in long-term liquefied natural gas, LNG, deals in the past months after prices eased, for fear of sudden price spikes as the global market remains tense after last year's crisis, industry executives said at a conference. Spot LNG prices in Asia as last traded at $12 per million British thermal units, MMBTU, on Friday after touching two-year lows due to high inventories and a mild winter at the start of the year. Just a year ago, prices hit record of $70 per MMBTU after Russia cut gas supplies to Europe and sparked a global scramble for LNG.
Russia's energy ministry said it sees no shortage of gasoline in the domestic market, with companies having cut their exports and increased production after gradually completing planned maintenance work. The ministry also said some refineries have not yet completed repairs, and oil companies are following government recommendations to systematically reduce exports. As a result, in June, gasoline exports fell 30% from May. The ministry continues to recommend that companies adhere to the policy to curb exports. Next, we have the top news in metal markets. South African miners have increased their efforts to bring on new solar and wind generation, renewables company JUWI said, as they seek to cut costs and emissions and address an electricity crisis that has hit their output and the wider economy. Frequent breakdowns by state-owned utility Eskom's aging coal-fired plants have led to extensive power cuts. Mines and their processing facilities, which account for up to 30% of the nation's power consumption, are routinely asked to reduce their use with major implications for their mineral output.
Copper prices drifted lower on Wednesday as a double-digit decline in China's industrial profit in the first 5 months weighed on sentiment, though losses were limited by tight global inventories and demand hopes. 3-month copper on the London Metal Exchange dipped 0.3% to $8,338.50 per metric ton by 0411 GMT, while the most traded July copper contract on the Shanghai Futures Exchange was down 0.6% at 68,020 yuan, $9,412.19 per ton. Profits at China's industrial firms shrank by 18.8% year-on-year in the first 5 months of 2023, official data showed, as companies wrestled with margin squeezes from softening demand amid a stumbling post-COVID economic recovery.
We will now look at the top news in the agricultural sector.
Ukraine's grain harvest is likely to fall to 42.5 million tons in 2023 from around 53 million tons in 2022 due to a smaller sowing area, the Ukrainian Agribusiness Club, UCAB, business association said on Tuesday. The harvest could include 16.3 million tons of wheat, 21.1 million tons of corn and 4.2 million tons of barley, the association said in a statement. First Deputy Agriculture Minister Taras Vysotsky said this week the ministry had revised its 2023 grain harvest forecast to 46 million tonnes from the previous outlook of 45 million tonnes.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.